Welcome to the Startup Funding Espresso. I'm Hall T. Martin, where we talk about how to raise funding and invest in startups and the time it takes to drink an espresso. If you have a question about startup funding or investing, please go to the website, startupfundingespresso.com, and type in your question into the chat bot in the lower right corner to receive an answer. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot at startup funding investing. Venture capital funds typically run on 10-year cycles. At a high level, the VC fund takes in capital from the limited partners and deploys the first half of the funds in years 1 to 3. The follow-on rounds are deployed in years 4 to 5. The fund collects returns in years 6 to 10. There may be early failures, in which case the allocated funds for the follow-on round are still available. The funds not yet deployed or allocated are called dry powder. This is the amount of funds available to deploy for new companies. Investments made during the latter half of the fund are made in later stage companies which can achieve an exit faster. Some portfolio companies fail to exit during the 10-year window. The team must decide whether to delay the exit to gain a larger return or sell the company to remove it from the books. During the latter half of the life cycle, the VC team helps the companies grow and then achieve an exit. This is where the VC's network comes in. A good fit for a VC is a company in which they can help find additional team members as well as follow-on funding. Consider the life cycle of the VC fund and how it impacts the time spent by the VC team. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start something today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.